Hello, this is the Chart Profit video, approaching 3 hours into the trading day on Friday the 4th of November. Quite a sell-off this week. We're looking here at the pre-open today. We're looking at the E-mini S&P. And finally, at the end of this week, we've seen the major point of control on this chart down here at 2087 come back into play. We've been marking this as major support on the chart for quite a long time now. Just a quick review, looking back just over a week to Thursday the 27th pre-open, said that the E-mini was once again probing 2142.25. This was pre-open, the half range of the August high. That was our resistance level, and it's right here, and we just touched it on the Thursday and came off. Following day, we saw the next important level, the point of control, the local point of control at 2133 came into play as we opened just right above it, tested it, and then it was rejected, and we saw a sell-off on that Friday. And I said pre-open Monday this week, Friday's session described that pattern and said, so price action on Thursday and Friday relative to these important levels was not encouraging. With the pulse chart looking weak in terms of breadth and momentum, I would need to see the E-mini printing back above this level, 2142.25, before considering the long side. And I said there is support at 2087, the major point of control. That was on the Monday here, pre-open. We saw the first significant buying or selling. Actually, it was selling the following day for many days, a long protracted period with no directional conviction. So this was the first aggressive selling, and that took us quickly back to the point of control at 2087, and we are looking for support here. Price down here is really weak. We don't want to see that going into next week. Major levels on other key charts that have now been tested: 115.35 on the IWM, the Russell 2000 ETF, and I said here this must hold, and the spider, major point of control at 209.90, must hold. Let's have a look at these charts. First of all, the E-mini. This is a live chart, bouncing back a little bit today. So there's the 2087 major here. It's price here that would worry me. So hoping for support here. Mentioned in my email that under times of stress, or in times of stress, these major charts will often quickly find their way back to the local or major point of control, which is what's happened here. So we've obviously anticipation of possibility of turmoil next week, a lot of stress in the markets, and we've just seen on many time frames that this is what happens. The charts just go back to their points of control. Unfortunately, they were quite a way down, especially here on IWM, Russell 2000. Here's the major, been marked on the charts, probably, is it years? It's a long time. And we're back testing that level again here. So again, we really want to see the support hold here. I think there's too many technical negatives that if we saw price under here, it'd probably be a situation where we could see another leg down here. So when we look here at the spider, the major point of control at 209.90, and we're currently printing at the end of this week below that level. We're running back towards it. I definitely want to see the spider closing back above that level today. Should all three charts that I've just discussed find themselves back above these levels going into next week, we've got a definite reference levels here. When I said earlier there were too many weak technicals, you can see them on the chart here. This is the pulse chart for the S&P. The New York daily breadth indicator in the middle here is red. This comes from this chart, the daily breadth indicators for the New York list that I follow, and you can see these two indicators at the bottom here. If this one's below 50 and this one's below 0, they kind of confirm that negative red bar here. Now this has been red or neutral for a while. We've also seen price momentum below 0, and it's actually heading down. So this is a really weak looking set of technicals. We're hoping best outcome over the next few days, weeks, we see this kind of thing happen, where momentum picks up and the breadth goes back to green. But this puts us in a dangerous situation, in as much as kind of weak environment like this, if you see red up here on the bars, indicating that significant selling that we just saw on the profile, can often lead to trend down. I mean, we do have this major time support here that we've just been talking about, but you know, price, especially if we're printing red below that level with this going on, puts us in a really bad kind of situation in terms of both technicals and price location. Going to quickly run through the sentiment. Just very briefly, this is a Ridex, or my version of the Ridex assets ratio. We saw a 7-month high back in August, just to recall here at the top, investors getting a little bit, or the retail investors here at Ridex getting a little bit excited about the market at that point. We've been down just about ever since. Can't say that the Ridex ratio has come off very much at all, so we'd be looking for a lot more bears in this indicator, and this indicator being a lot lower before expecting any kind of contrarian support or interpretation of this chart. So it's actually just a little bit worrying. There's a bit of complacency going on here, I think. In the public poll, we've got slightly lower bulls percentage, 23.6, and bears percentage almost unchanged at 34.3. No dramatic increase in bears in this poll. This is the investors' intelligence. Just reading through the comment that I made and looking at the chart, I can see that actually the chart at the bottom here, as far as the indicator goes, isn't quite up to date. So that's a mistake. But the point is that the bulls percentage was a bit lower, and bears percentage was higher, 24.3, just a little bit higher. And the 4-week moving average of net, which I follow, that's the bulls minus the bears, that's the black line at 20.88. That is actually a 20-week low. I'm really not sure that that is that significant, to be honest. Lipper US fund flows, reported equity fund, including ETF outflows, a negative 3.4 billion to the 2nd of November this week. The 4-week flow is a negative 15.1. It's actually up. We lost a bigger number 4 weeks ago. So we're down here, but we've seen lower numbers down here and here at these lows. So again, I'm not reading anything from a contrarian aspect at the moment into this particular chart. That's the 4-week flow number. I can keep those flow numbers on various time frames, and this one here you can see at the bottom here, this is the 8-week flow over here, or 8-week sum of the individual flows, and that is actually quite extreme. So summating the inflows and outflows that Lipper give us week to week over 8 weeks, that's pretty low. Actually lower than these 3 lows here in the market. That might set something up. Would prefer to see the the Ridex number much lower. This is the Bond Etf. Said last week that, well, just reviewing what's happened, the 4-month up here became resistance to this rally back here. We saw a severe decline down to the 3-year at 130.77, and again back to the point of control. I'm just hoping, as far as bonds are concerned here, that this holds. Price down here would be a negative. I mean, are we in a situation here where either bonds will capitulate below the point of control, or will it be equities looking at those levels we saw earlier, or are we in a situation, which may be the case, but in the last few weeks we've seen both these markets selling off, that they're becoming more correlated, and they'll either both bounce back, or we'll see a breakdown of these levels on all these charts, and both equities and bonds heading lower. That's why I like these support and resistance levels, these points of control. Gives you a reference. We're going to look at oil next. This is the commitments of traders data for oil. We showed this last week, and I've made the point in the pre-open over the last few days that the commitments data has looked particularly weak for quite a while now, since this breakdown here. I think this is what we drew in last week on the chart. So a couple of weeks ago, the commercials net line here fell below previous levels here and made them the commercials as bearish as they've been for a long time, years. And at the same time, the large speculators hit a peak here, and I've been saying that that's usually a bad combination. But we were talking about the major support here at 1078, and last webcast we were just above that level here on the Friday, talking about this support, saying that the commitments data looked pretty weak, but we have this major support level here, and that if that went, we might see the oil falling quickly, which it's done here. And in fact, we're now below the halfway point of this low to this high, which comes in here, this dotted line. We're actually just printing below that. So really, this has not been helpful this week. A really sharp sell-off in oil. Every day I've been looking at news stories related to oil. We're seeing some whipping back and forth today, for instance, but generally, as you can see, the trend now is lower, and this is a really weak looking chart right now. So minimum, we need to recover back above that level, and before looking at the long side, you want it back above 1078, unless that point of control shifts, which it hasn't yet. Just going to go over some same ground again. None of these controlling prices have actually shifted, so we're still talking about the same level. So here on GLD, the gold ETF, we know this 3-year value area high up here was probed a couple of times, and then we went into a bit of a range, and then a sharp sell-off, and once again down to that major support down here, which is currently 119.84. So say that controlling price hasn't moved. We rally back pretty quickly with the weakness in the dollar, concerns over next week, and GLD has done the thing that a lot of these charts like to do just to annoy us. It's come up to the halfway point on this rally and it's stopped. And what we're looking for obviously is price above that halfway point, just as an indication that this trend might continue. Even better, some kind of maybe intraday pattern like that where it consolidates and then breaks higher. But we have reached that resistance, and from my way of looking at things, if we found support here, that's good. Price above here would be even better. And if we're looking at cash gold, it's done exactly the same thing, just above 13.05. Just to review here, the dollar index moved into a much stronger position at this point, above the big point of control here in the halfway point off this high to this low. So in the longer term, until it breaks back down below these levels, it's in a strong position. But we have seen quite a jittery sell-off this week and the end of last week. We see that reflected in the strength in the Euro FX chart. Not in a strong position yet, but trying to consolidate above its halfway point off this major low over here. So that's the first attempt. Price above here, above 111.65, as I've been saying for a while now, would have you looking at the long side of the chart. There might be strong resistance at that point. Pound also benefiting from the general weakness in the dollar this week, but also from the Brexit news that came out of the courts this week. So we're up on a multi-day high. Is it a 20-day high? Having quite a powerful rally this week. And I'll lastly show this chart. The Australian dollar showed exactly this same chart with the same levels for a couple of weeks now, attempting to get above the major point of control at spot 76.50. Price up here is in a strong position, and as I've said, this is a really interesting level for this major to emerge for me and suggest the possibility of a major trend change for the Australian. It's got to hold this level. It's got to give us some kind of oscillator low or something above this level. But a breakout, I think, it could be a strong indication the Australian's heading higher. Price back below here just throws that all into doubt, but it's just really, for me, it's where that's emerged. That point of control is just very interesting. Actually, it's not the last chart I'm going to show you. I omitted to show you the DAX and the FTSE, the European indices. This is the German DAX. Again, probed its 3-year value area high up here and was rejected. Back below this major half range. 10.545 we're under there. There's no obvious support here to me until we get down to this level here, which is the major point of control at 97.50. And it also happens to be the exact halfway off this major low to this high. So there is a bit of a bell curve going on in here, not well drawn, but you know what I mean. That's a long way down. We have other key charts to concentrate on in terms of important levels. I don't have anything in here. And here's the FTSE. One of the charts that I sent out midweek as a key chart was this FTSE and this level here, the 7-year at 68.23. And we've broken below that quite dramatically on Thursday, and down hard again today. FTSE 100, also the mid-caps UK, just UK generally today has probably been the weakest, possibly because these major support levels here have gone. Again, in terms of support, nothing really in this area here. So our key charts, just to remind you, going into next week, IWM, Russell 2000, 115.35 is the major. We want to see the spider back above 209.90, currently printing just below that level, and the major level at 2087 for the E-mini S&P. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.